here at the PDAC 2020. I'm very excited to have another guest with us. You've been on several times. David Erfle of the Junior Miner Junkie. You bring a very interesting scope to the interview and the sector as well. So I really appreciate you being on.
Anytime. I always love talking to you, Sonny.
So, this last week has been quite eventful.
Oh, yeah, you can say that.
These questions don't apply anymore.
No, they don't. No, they don't. It was funny. We were just talking off mic that I had all these wonderful answers to these questions, and now they're just thrown out the window.
Yeah. Well, let's see what happened there. I mean, it's been quite amazing. Yeah. I mean, we're talking about
it's impressive, really.
Yeah. How the gold price has been trading very steadily, very stable. Has been on a good run over the last several months, and you've seen a lot of equities run up as well, and then boom. On Thursday or Wednesday is when we had the market drop significantly. The coronavirus. I mean, the market in the U.S. went down 4,000 points or something like that.
Well, it began
29 to 24.
Yeah, the shellacking in our sector began on Thursday, really.
Yeah, exactly. Yeah. So the TSX suffered. Gold price goes from 1680 when we were talking down to 1580, $100. And then silver price went from 1880 to around 1650 is what it's at right now.
Yeah, well, actually, we had a $125 reversal in the gold price last week.
In 2 days.
Yep, it hit around 1691 and then closed the month at like 1665 or something like that. Yeah.
Is this panic? Or
absolutely, it's panic. Yeah, it has nothing to do with fundamentals. It has nothing to do with technicals. Anything that could be sold was sold last week. You know, margin clerks don't discriminate. Anything that had a bid was being sold. So looking at charts, looking at short-term charts is really not really advisable. It's because looking at these things, it's like, oh wow, look at that. Look how much that was sold off. This doesn't make any sense. And well, it does make sense because things that are liquid get sold, and risky things that are liquid get sold first.
Yeah.
So our sector is obviously very risky. So when the gold price was going up so much, we actually were told this in hindsight because the miners' relative weakness against the gold price was glaring before this happened.
Right.
And the gold price broke out in summer of last year.
Right.
And yet the GDX and the GDXJ have yet to break out of their 7-year basis.
Yep.
So this was kind of telegraphed by the weak share action.
So what are your thoughts in terms of the whole event over the last few weeks, where you're just seeing a whole liquidation of positions from gold and silver into cash? I mean, what is the argument there then that bodes well for people to still come back and buy gold for the safe haven asset?
Well,
going back to cash,
because the fundamentals are still there.
Okay.
I mean,
and what are those fundamentals?
The fundamentals are central banks continue to buy gold. Yields continue to be very low, 100-year lows now, U.S. Treasury yields.
And how about the bond market?
The bond market, the Eurozone and Japan have already destroyed their bond markets. And a lot of that capital was coming into the U.S. stock market as a safe haven. You had U.S. stock market, U.S. dollar, and gold all acting as safe havens at the same time.
Right. Yes.
And when you had the market panic that we saw last week, then all of a sudden, let's get to cash and then see what happens.
Yeah.
So we had a little bounce in the GDX on Friday, and we had a bounce in the Dow and the S&P on Friday.
Yeah.
Because with the VIX got over 50, I think, on Friday.
Right. Yeah. Yeah.
So that's higher than 2008 panic.
Yeah. Yeah.
So,
well, also the gold. We just mentioned off mic right now. You were mentioning the gold silver ratio reached a peak as well of 100.
Right.
And the last time it was around 92, 91 or something.
Yeah, the gold silver ratio peaked over 100 on Friday, and it peaked over 96 in October of 2008 on the day the GDX hit its spike low.
Interesting.
So yeah, that's very interesting. But the most interesting thing to me here, as far as the shares are concerned, is you had the GDX with a cup and handle formation getting ready to break out of a 7-year base. In the meantime, you've got the CDNX, the TSX Venture Exchange.
Yeah.
I know it's only about 50% miners now, but still, that made an all-time low on Friday.
Interesting.
Lower than 2016, which was the buying opportunity of a generation in the miners.
Right. So what is it saying to you? Is it to say, you know what, okay, I'm going to take some off the table, play this out, see how the market reacts, or is it a time where it's just like, you know what, valuation's down 20-30%. I'm going to take my spots and start buying a lot of stock right now.
Well, the time for taking money off the table was last Sunday, and I told my subscribers as much before this panic started to happen. I was taking some money off the table, and I advised them to do the same. Sure, in hindsight, I should have taken more.
Yeah.
But now's not the time to panic and sell anything. No, I mean, now's the time to sit with your cash if you have some, and wait and see how this plays out. I mean, we saw a lot of hammers in the elite juniors last week.
Right. Yeah.
Right. We saw some money coming in, but I'd still wait and see how this plays out.
Okay. So, what are some catalysts then for the for the precious metals and the base metals to run this year?
Well, as far as precious metals, I mean, these central banks are they're discussing right now. Bringing more liquidity into the market. I mean, the CME FedWatch tool is already pricing in a half-point rate cut.
Interesting.
So,
okay.
And Kevin Warsh on Friday even said, the Fed banker, who's basically been bandied about to replace Powell,
right? Yeah.
As Fed chair, he said that the Fed on Sunday should come out and do an emergency half-point rate cut.
Interesting.
And I wouldn't be surprised. Today's Sunday. I mean, I wouldn't be surprised if that happens. And if you see that happen, you're going to see a slingshot move for the ages in equities, in gold stocks.
Mm-hmm.
So I don't know if that's going to happen, but I'm pretty sure that the Fed is going to lower rates and soon. And the next Fed meeting is in 18 days.
Yeah.
So we'll see. It's going to be
very interesting.
Do you
expect that from other central banks around the world?
Oh, absolutely. I mean, look, in Eurozone and Japan, they can't lower rates anymore.
Yeah, of course. Yeah, well, that's why they're printing money.
Exactly.
That's the alternative.
Exactly.
Right.
So, yeah, it's going to be very interesting.
Okay, interesting. So then what are you doing in terms of strategy going forward? Like, what are you looking for then in terms of mining companies and picking your spots?
Well, I'm here to speak with management of the companies that I have core positions in, and to look for some more, some other companies to add later on. I mean, you're seeing
exploration producers,
exploration, early stage, maybe some developers, producers maybe not as much. We'll see, but yeah, it's a time to get all the information that you can about all these companies, but I still don't think it's a time to deploy just yet.
Interesting. Okay.
But it might be on Monday. Who knows?
Yeah. Of course. Yeah, we'll stick to
what we talked about. I mean, I mean, now's a good time to step back, take a deep breath. If you have some cash, sit on it and wait and see what happens.
Okay. Fair enough.
Yeah.
Okay. And then going forward, I guess. Well, actually, looking back, just taking a step back, a lot has happened in the last 2 years for the mining sector. Mm-hmm. You're seeing kind of a re-rate. A lot of the more the senior producers, I would say, in the mid tiers, but more of the senior producers really trying to prove their worth to provide as much compelling shareholder value for investors to come back to the space. Mm-hmm. I guess they're generalist investors too, because they're doing a lot of M&A. Mm-hmm. They're divesting a lot of the non-core assets. Trying to get rid of the debt burdens. They're still increasing their credit facilities, though. Doing some form of share buybacks, not so much here and there, and now instituting dividends and actually doubling them in such a short period of time. What does this all mean for you in terms of the mining sector as it is, as opposed to when the last cycle we experienced, where it's just production, and then it's taken now since 2008 to kind of get to this point where what's real value, right?
Right. Yeah, I mean, it's the mining sector. These companies, they realize to attract generalist capital, they need to get bigger. And Barrick and Newmont addressed that to some extent when Barrick brought Randgold and when Newmont merged with Goldcorp. Right. So they understand they need to get bigger. They understand that they need to raise their dividends. And Newmont did a share buyback with a lot of their cash. So yeah, it's.
But what does that mean to be bigger? For what reason?
to bring in generalist capital.
Okay.
I mean, they're not going to come into companies that have a market cap, of
Okay.
15 billion.
Yeah, so you're
That's
talking about
too
market
small.
cap, not ounces of production
Right.
necessarily, but yeah,
Right.
that obviously
Right.
is the result of that. Okay, and then?
Yes, and then as far as acquisitions are concerned, these miners are looking at these things like, is this thing ready to go to get built? Can this company build it? Right. I mean, we know the blue sky's there, and let's see them get a little farther to see if they can begin to build it, and then maybe we'll take it over.
Right.
So it looks like they're. I mean, if you're in the orphan stage right now, you've got to have a management team that shows that you can build this mine.
Right. Yeah.
There's been a handful of discoveries, like I talked about the TSX Venture being so low. I mean, if you take a look at the TSX Venture and you take a look at the GDX, I mean, they don't even look like they're the same market. Mm-hmm. But there has been more than a handful of companies that have been very successful. And the handful of companies that have been successful, the discovery plays, they have management teams that have access to capital, they understand share structure, they have a district scale size land package in a safe jurisdiction with high grade targets, and they're hitting on these high grade targets. And those companies are being rewarded by shareholders. And optionality plays still are not being rewarded. So let's say you're an optionality play, you're an optionality play, you've got 3-4 million ounces that are economic at $1,500 gold, even at $1,400 gold.
Yeah.
And you're still not getting any love from the market.
Yeah.
You're still not getting you're still not getting any love from the capital markets either.
Yeah.
So I think the capital markets are along with the shares, we're saying, hey, look, 1550, it looks like it's going to get tested again.
Yeah.
And if it gets tested and broke, then it's going to go down to 1400 and test that breakout.
Right.
As far as the fundamentals are concerned, as far as the fundamentals are concerned, with central banks continuing to be loose with their monetary policies,
Right.
and probably getting much looser very soon.
Right.
And central banks continuing to buy gold.
Yeah.
That's all very positive.
Well, printing and the lowering of rates.
Right, printing and the lowering of rates. Yeah. I mean,
So, bear or bull this year?
Well.
No in between.
Well, of course I'm a bull. Of course I'm a bull.
Okay.
But a cautious one right now.
Okay, fair enough. Fair enough. Okay, we'll end up on that then. Well, David, thank you so much for being on the segment again. And if you want to find out more information about David Erfle and his newsletter, Junior Miner Junkie, I'll put the description below. And you can get in touch with him directly and find out more about what he does. Thanks, David.
All right.
All right.
Thank you.